The fourth quarter was an interesting one. We had a pretty good summer through the first part, but September there was an aggressive sell-off. But once the fourth quarter and October rolled around, all those concerns were out the window, and it was back to the races. We had some hiccups along the way around Thanksgiving when the news of the Omicron variant popped up, and then again after the Federal Reserve had its meeting in the middle of December and indicated the possibility of rate hikes in 2022, had a short-term impact on the market. But again, things recovered fairly quickly, and we were setting new highs at the end of the year. So overall, just a very positive from an investor's perspective fourth quarter, and one that perhaps was a little surprising after the way that the third quarter wrapped up.
The fourth quarter of 21 marked an important period as governments around the world began to embark upon the process of reversing accommodative measures to curb inflationary pressures. For example, the Fed announced its intention to reverse the balance sheet expansion while providing guidance of their intent to raise interest rates over the next upcoming year. We do expect that next year we will see additional volatility and the potential for rising rates across the curve. And especially in the Sextant Bond Income Fund, where we primarily hold long-dated maturities, we're very much trying to position that fund to be defensive against future volatility and potential rising rates across the curve.
So looking out to 2022, the Federal Reserve has shown a more hawkish tone as it begins this fight to slow inflation. However, confronting this regime change, we note that the Fed is walking on very tight rope with the potential for policy errors. If the Fed hikes rates too fast on one hand, it risks strangling out the economic recovery. On the other, if the Fed raises rates too slowly, runaway inflation could overheat the economy, and this could have deleterious effects. We remain keen here at Saturna at the wheel, plotting a path through what we expect to be increasingly unsettled waters, but expecting that bonds will remain a very valuable asset and tool for absorbing any volatility.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting sextantfunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Sextant Funds in a free prospectus or summary prospectus, please visit sextantfunds.com or call 1-800-728-8762.